Appreciate it. Well, it was a big moment for Apple, becoming the first U.S. company to briefly touch $3 trillion in market value. Here now to discuss is Capitalist Pig hedge fund manager Jonathan Hoenig and managing director at Market Gauge Group, Michelle Schneider. Good to see you both. Thanks for being here. Jonathan, first of all, let's talk about the iPhone. It is the cash cow of Apple, as everybody knows. When you have increased inflation and people have to cut back on things, basic things like meat and milk and stuff like that, they may be less prone to trade up for a new version of the iPhone. Doesn't that hurt Apple?
Potentially, David. I mean, look, a lot has hurt and impacted Apple over the last, 20, 30 years since, keep in mind, this company was left up for bankruptcy in 1997. It was almost bankrupt. So what they did, David, they innovated. So whether it was the iPhone, whether it was the whole iTunes platform, Apple is the world's first or America's first $3 trillion company exactly because of that innovation. And you got to kind of take your hat off, David, whether you're bullish or bearish on Apple. Here's a company that is worth more than the entire GDP of Britain, of Russia, of Canada, of France. This is a major achievement, not just for Apple shareholders, but for the American way of life. Only in America do you see this type of wealth created.
Absolutely. And Michelle, you never want to bet against Apple. It's like betting against the U.S. economy. I mean, it is a cash cow. The whole company is. But the past 20 years, as Jonathan's been talking about for Apple, is a period when we haven't had a lot of inflation. This is something new. It's a new twist to our economic environment. And I'm wondering if Apple is particularly vulnerable to that new twist.
Well, up to this point, considering that we really started to see inflation become a narrative in 2021, Apple sort of skirted through that. They didn't really get affected as much by the chip shortages or the labor problems. But that could certainly, if inflation continues, which we believe it will, affect them in 2022. And we have to remember that the last earnings report actually fell short because of chip shortages. And we've got earnings coming up now at the end of January. They haven't announced an official date, but the expectation is 30 times the 2022 fiscal year earnings estimates. That's a lot. That's lofty. So if the inflation is going to be a factor here, we could see a disappointment. Would that be bearish? Well, it might actually just give investors a better buy opportunity at cheaper prices.
So 10 seconds to both of you. Jonathan, would you be buying in 2022, Apple?
I think the fear about David, I would not be. And the reason is, David, Apple is so ubiquitous in everyone's portfolio. Keep in mind, it's 5% of the S&P. It's 10% of the NASDAQ. So chances are, even if you don't own Apple, you probably have it somewhere else in your portfolio.
And Michelle,
for that reason alone, I think caution is warranted.
Quickly to you, are you buying this year?
Again, I would have to see a decent-sized dip with a better risk than getting in at these lofty levels.
Yeah. Michelle, Jonathan, great to see you. Happy New Year. Thank you very much. Well, Bay Area business owners blast